Hi guys, this is going to be a video tutorial on Fibonacci and how it can be used to help you in your trading, as it's a great tool in technical analysis. So we'll start off by getting the actual tool. So you open up your MT4 browser. There's two ways to get your Fibonacci. You can either go to Insert, scroll down to Fibonacci, and it's called Fibonacci retracement. Then you have this little crosshair. So we'll just quickly get it on the screen now so you can see what it looks like. You do it from one point to another, so it's from a low to a high. And you have to right click and then drag up. As you can see, you can't really see it that much, but you can see this red dotted line. So you will double click on this line, right click, press Fibo properties, change the color so it's a darker color, blue, press OK. Now you can see the Fibonacci lines and they go across the screen regardless of how far you go, and you can see that this dotted line, this red dotted line, can be moved, and the Fibonacci lines also move as well. But one of the key things from my past experience that I've noticed as well is that you can see these numbers that go from 0, 23.6, 38.2, 50.0, 61.8, but due to my experience, I discovered that adding an extra line here at 66.0 is a great help for your trading, as sometimes price does actually go to the 66.0. So we'll add this in now. So you right click, Fibo properties, and you press add. You press 0.66 and then double click on this part here, the description, and then press 66.0, press OK, and press OK again. Now you've got the extra line there. Basically what Fibonacci is, it's a tool used to help to determine market trend, and it also determines areas where price is likely to find either support or resistance. So for example, if you're in an uptrend, let me just show you now. I'll delete this one and I'll put it in the correct place. So take here for example, you can see that price started off here, and it goes up and then retraces down and goes up again. So Fibonacci tool, I'll show you another way how to, a quicker way how to have the Fibonacci tool at the ready all the time. Is you go here, this little dotted line section next to the cursor, then you right click, press customize, scroll down to Fibonacci retracement and press insert. There you can see there it's been inserted there, and then you press close. So now instead of having to go to insert and Fibonacci and go across, now all you have to do is click this here. So once you've clicked it, you can see that you've got the new crosshair on your where your cursor was, and you do it from one, you draw the Fibonacci from one low to a high, so up to a high, so from that low to the high. And generally the areas that if you're in an uptrend, the areas where you're likely to find most support is between 38.2, which is this level here, this blue line here, and 66.0. According to Fibonacci, if you're in an uptrend and price dips below the 66.0 level, then you're no longer in an uptrend. That is according to Fibonacci law. So to mark out this area, the key areas when you draw Fibonacci are between the 38.2 level and the 66.0 level. So I'll draw the Fibonacci, I'll mark out this level. So you'd say, if you're in an uptrend and you've drawn it to there, you'd say if price dips into this area that you've marked out, the area between 38.2 and 66.0, you'll look for some bullish candlestick patterns or signs that the market will turn. As you can see, price dipped and nearly touched the 38.2 level, but buyers pushed the price back up before price actually reached the 38.2 level. So it's an example of the Fibonacci level sort of being respected, and I say sort of because it nearly reached the 38.2 level, but instead the buyers pushed the price up before it actually got there. So we'll delete this one now. Let's look for another opportunity. Another opportunity is from here to here. As you can see, price dipped a bit, then price went up, and then you can see where it found the level of support here. So we'll see if the Fibonacci level is respected here. And that's perfect, because as you can see, I'll mark out the level again. Remember, the key levels in Fibonacci are the 38.2 level all the way to the 66.0 level. So as you've marked out the Fibonacci, you draw the Fibonacci from in an uptrend, you draw Fibonacci from a low to a high, and then it's best if you can mark out your key levels, which is the 38.2 and the 66.0. So you'd say if you're in an uptrend, for example, this is how it would look. If you're in an uptrend, and the reason I've scrolled across now is because I'm imagining that you can't see what's happening beforehand. So you draw your Fibonacci up from the low here to the high. As you can see, price is retracing. Retracing means it's going down. If you're in an uptrend and price is going down, that means that price is retracing. So as you can see, price is retracing, but you know that you're in an uptrend, and when you're in an uptrend, the best thing to do is look for opportunities to buy. So you've marked out your Fibonacci, and according to your Fibonacci, you would say once price enters my marked out level, which is between 38.2 and the 66.0 level on the Fibonacci, I will look for some bullish signs. And as you can see, there was a spinning top followed by the next candle being a bullish candle, which is bullish candlestick formation. You can see that price did enter your marked out level of Fibonacci, which is between the 38.2 and the 66.0, and you can see that price did find support here and made a higher high. So price reached here, then it made a higher. This was the previous high, and it exceeded the previous high, so that's a higher high. So you can see how Fibonacci worked there. And let's find another example. Here would be another example here. Remember, you draw Fibonacci, you click on the draw Fibonacci icon here, then you draw the Fibonacci from the low to the high. And remember, imagine you can't see what's going on, and all you can see is the low, and you've made a new high, because this was the previous high and this is the new high. So you draw the Fibonacci from the low to the high. You know that you're still in an uptrend. You've now marked out the Fibonacci. Your buying area, according to Fibonacci, will be between the 38.2 level and the 66.0 level. So then you'd mark out your area, and you'd say once price enters this key area, which is between the 38.2 level and the 66.0 level, I will look for signs of bullish candlestick formation. And here you can see how on this candle here, this large green candle, it's a bullish engulfing candle, and as you can see, if you bought, price then made a new high, so you could have got this profit here. So let me show you on this one. On this one, you could have got, say if you entered on the close of the next bullish candle prior to the spinning top candle, which is here, and you entered at this price, you could have got you could have got this long move depending on how long you held for, but if you just held to here, you would have got over 100 pips anyway. On this one, if you bought here, you could have got 200 pips. So you can see that Fibonacci does work. The thing is that Fibonacci doesn't always work, because sometimes price does go below the 66.0 level. I'll find an example of where it doesn't work here, for example. So for example, we get the Fibonacci, we draw it from the low to the high, which is there, and as you can see, price went up. Price price went up, and according to Fibonacci, you'd wait for some bullish candlestick formation in between the 38.2 level and the 66.0 level. But as you can see, price went below the 66.0 level, and if you followed Fibonacci on its own, then according to those rules, you would no longer be in an uptrend. So that's where Fibonacci doesn't always help. So we'll delete this one. But Fibonacci can also be used in a downtrend as well. So I'll look for a downtrend. Let's take here for instance, price is in a downtrend, it goes down, the price starts retracing. So we click on Fibonacci, draw it and drag it down to the low. It's not that low, it's this low here. And as you can see, so with it, when you're in an uptrend, you draw the Fibonacci from the low to the high, but when you're in a downtrend, you draw Fibonacci from the high to the low, which is this high here to this low here. And you still mark out the same key level, which is the 38.2 level and the 66.0 level. And you'd say, I drew the bullish Fibonacci in green, but now I'll draw the bearish Fibonacci in red, just so that you can see easier. Well, pink. So this is bearish Fibonacci. So you draw the Fibonacci from the high to the low, and you mark out the key level, which is the 38.2 level and the 66.0 level. As you can see, price did enter your Fibonacci level that you marked out. It entered the past the 38.2 level, and in the bearish Fibonacci, you'd be looking for a bearish candlestick pattern or oscillator showing signs of bearish signal, or clearly in a downtrend as well. But here the bearish candlestick pattern is a large bearish engulfing pattern, and if you entered on the large bearish engulfing pattern and it went to the low, you could have got 268 pips. So you can see that the Fibonacci works on both uptrends and downtrends. I'll find another opportunity where Fibonacci works on a downtrend as well. But again, I must say that Fibonacci doesn't work all the time, but it's a good tool when price does enter the key areas and you can see clear signs of a reversal pattern, or being either bearish or bullish candlestick patterns, or incorporating it with oscillators, which I'll go on to another time. It's a very good tool to be used. But I'll draw another Fibonacci here from the high to the low, which is there. Draw it from there to there. But as you can see, again, this is a time where the Fibonacci didn't work well because price exceeded the 66.0 level. So according to Fibonacci, you'd no longer be in a downtrend. So again, what Fibonacci teaches us is that when you draw the Fibonacci from a high to a low, or a low to a high, but in this case from a high to a low, if price exceeds the 66.0 level, you're no longer in a downtrend and you're considered as not in a trend. But however, you can see that you are in a downtrend because price goes down. So what I would say is, if you are going to use Fibonacci in your trading, only use it for entries, but never use Fibonacci to determine if you are in an uptrend or downtrend. Go back to basic support and resistance and basic trend definition of what market trend you're in. So again, to recap, you'll never use Fibonacci as a way of determining market trend. You will only use it as an entry method, because even though price does exceed the 66.0 level here, you are still in a downtrend. Just because it exceeds the 66.0 level, it doesn't mean you're in an uptrend. You would only be in an uptrend if the market surpassed the previous high, which is there. So I'll go on to another currency pair so that you can see here, GBP JPY. Let's find an easy opportunity for it. Oh, you can do it across the all the way across the screen as well. So we're going to do from this low to that high. Click on Fibonacci, click it at the bottom to the top, which is there, and you can see that your area would be from your 38.2 area all the way to your 66.0. Again, I'll make the box green so that you can so that you know that you're in bullish, like green. So this is, so again, you've marked Fibonacci from the low to the high. That's what you do when you're in a bullish market and you're looking for buying opportunities. You draw from the low to the high. Then you mark out your key level, which is the 38.2 level to the 66.0 level. As you can see here, price does touch the 38.2 level, and the next, which will be the long pin bar, aka a hammer, which is also confirmed by the next candle, which is a bullish candle. So if you entered on the pin bar as it touched your 38.2 level, which is a bullish signal, you could have gained 120 pips. This is a 4-hour chart, so you could have gained 120 pips based on you just marking out your key level and waiting for price to enter your your bullish marked out zone from the Fibonacci according to the 38.2 level and 66.0. As you can see, price does re-enter it again, but what I found from my past experience, when price generally re-enters an area of your Fibonacci, it's generally weaker. But although you do have bullish candlestick pattern here, and if you bought, I say bullish candlestick pattern, sorry, because you've got a bullish engulfing, this green one engulfs this red one, and you could have entered here and still gained 50 pips. Again, you've got another bullish candlestick pattern here, and then you would have made a loss, because again, not every single strategy makes a profit, but you would have made a loss here. But here you have a bullish pin bar, and you would have made 150 pips here. And the same, but this is another bullish engulfing candle. This green candle here engulfs this red candle, and you would have, this one would have made 150 pips. So you can see that when you mark out the key levels, and when you mark out the key level and you've marked out your buying area, if you only look for buying opportunities within this area, you can see how successful it is. You can see that you only had one losing trade, which was here, but all the others would have made profits ranging from 50 pips up to 150 on this currency pair at the minute. So we'll look for another opportunity. We'll draw the Fibonacci from this low here to this high here. And as you can see, you draw the Fibonacci in bullish uptrend from the low to the high, and then you'd mark out your key level, which is the 38.2 level and the 66.0. And you say, if price enters my key level here, which is between the 38.2 and the 66.0, I'll look for bullish candlestick pattern and I will enter the market. But you will only enter the market if price does enter your buying zone. As you've seen previously, sometimes price does not always enter your buying zone, and if you was to follow the strategy, price must enter the 38.2 and the 66.0 area marked out. If it doesn't, then you wouldn't enter the market. But in this occasion, it does, and you would have gained. If you entered the market on this bullish engulfing candle here, you could have gained 220 pips. And again, I did mention, when price does go up and then re-enter the marked out area that you've got, generally I wouldn't recommend to re-enter the market. But if you did, you'd enter on this bullish candlestick here, and you would have made a loss, because as you can see, price went below you, so you would have made a loss. There's another bullish entry here, another bullish candlestick here. It's a bullish engulfing, and you would have made a loss here, or you could have gained 30 pips. And as you can see, price went below and it's no longer respected. But I'll find now look for bearish signal. So we'll draw it from the high here to the low here. But as you can see, I'll mark out the area to show you. Okay, in pink. So when you draw in a bearish Fibonacci retracement, you draw it from the high to the low. And as you can see, you mark out the 38.2 level and the 66.0 level, but as you can see, price did go past the 66.0 level. So according to Fibonacci, if price goes past the 66.0 level, you no longer be in a downtrend because it surpassed your trend line. Sorry, it surpassed the 66.6 level, 66.0 level. However, as I did mention, you should never use Fibonacci to determine market trend. You only use Fibonacci as a means of entry or a price target. So it's basically used as an area which shows the likely market turning points. Also, just to add, I'll go back to the Euro USD when we was doing the bearish ones here. For example, if you was in a downtrend and you sold at around about this price here, you could have gained this profit down from there to there, which is around 500 pips, saying if you did sell from there. But the way Fibonacci can be used, it can be used as a method to scale in. So what that means is, if you've already entered short at this level here, you could say once price does enter my bearish level, I can sell the market again here and wait for my profits to run. Also, another thing you can do, you can use Fibonacci levels as a way to trail your profits. So for example, if you sold the market here and you drew your Fibonacci, but you can see that the price is retracing, you could use your Fibonacci levels and say, okay, then price should not exceed the 66.6 level, so I will move my stop loss from up here down to this level here, meaning I've locked in a bit of profit. Then you can move it down to the 50% level once you can see that price has gone down lower, and you can keep on locking in profits according to your Fibonacci level. So Fibonacci, just to recap, Fibonacci is used as a means to determine where price is likely to find turning points. So it's likely to find bullish or bearish turning points and areas of support and resistance. It can be used as a target to initially make a trade. So like if you enter a trade for the downside, it can be used as a target for where you expect price to reach. It can be used as a means to add to your position, and it can be used as a way to trail your profits, so that you trail your profits loosely so that the trade can be given room so that you can make more profits. I did show how Fibonacci works in both uptrends and downtrends. The downtrend ones are shown with the pink box, and the uptrends are ones with the green box. See another green box here. And it works well with things like trend lines. So you could also draw a trend line here, and you can see that as long as once you draw a trend line, as long as price is, if your trend line is within your Fibonacci level, that makes your trend line even stronger. So I'll do it again here. It's not a very good example here, but you can see if price, even though price did reach the 38.2 level, which is here, however, if price reached the 38.2 level but also touched the trend line, that would be even stronger signal to buy. So you can see how you can use Fibonacci alongside support and resistance, and also alongside trend lines. But this was a quick video on Fibonacci. We'll also recap on Fibonacci again and make more videos on it, but hopefully this is a good starter to help you get started. Again, if you don't know how to find Fibonacci, I'll quickly help you find it. Just drag and drop another currency pair. So you press insert, go down to Fibonacci, then press retracements, and then when drawing Fibonacci in uptrend, you draw Fibonacci from the low to the high. So that's how you draw Fibonacci in uptrend, from low to the high. And when you're in a downtrend, to draw Fibonacci, you click on insert Fibonacci retracement, and you draw when in the downtrend, you draw Fibonacci from a high to a low. So uptrend is from a low to a high, and uptrend is from a low to a high, yes, and downtrend is from a high to a low. Or you can click on your, you can click on your Fibonacci icon here and use the Fibonacci again there, rather than pressing insert. But as a quick video, and I hope it helped. We'll make more videos on Fibonacci just to recap and make sure that you understand it. But Fibonacci is a good tool. Just get practicing and let me know how you feel about it.